In a landmark ruling, a District of Columbia court found Google in violation of antitrust laws. This decision sends shockwaves through the tech world, challenging Google's long-standing dominance in search and advertising. The court ruled that Google had engaged in anti-competitive practices to maintain its market power. This ruling could have significant consequences, potentially reshaping the digital landscape. The Justice Department's lawsuit, which led to this ruling, accused Google of stifling competition. The court agreed, finding that Google's practices harmed both consumers and competitors. This decision marks a significant victory for antitrust proponents and could embolden regulators to take a tougher stance against big tech. The implications of this ruling are far-reaching. It could force Google to alter its business practices, potentially impacting its profitability. The decision also sets a precedent for future antitrust cases, potentially influencing how tech companies operate in the years to come. This ruling is a stark reminder that even tech giants are not above the law. While Google faces the most immediate consequences of the ruling, Apple is far from immune. The iPhone maker has a lucrative revenue-sharing agreement with Google. This agreement makes Google the default search engine on Apple devices, generating billions for both companies. However, the court's decision puts this agreement in jeopardy. The Justice Department argued that Google's payments to Apple were anti-competitive. The court agreed, suggesting that these payments might need to be re-evaluated. This puts Apple in a precarious position, potentially jeopardizing a significant revenue stream. The loss of this agreement would be a blow to Apple's services business. This segment, which includes revenue from the Google deal, has been a key growth driver for Apple in recent years. Losing this revenue stream could force Apple to find new ways to monetize its massive user base. At the heart of this case lies the Information Services Agreement, ISA, between Apple and Google. This agreement, signed in 2005, has been a goldmine for both companies. Under the ISA, Google pays Apple a substantial sum to be the default search engine on Apple devices. This ensures that Google maintains its dominance in search while Apple enjoys a steady stream of revenue. The exact financial terms of the ISA have been shrouded in secrecy. However, court documents reveal that Google paid Apple an estimated $15 billion in 2022 alone. This staggering sum highlights the immense value of this agreement to both companies. The Justice Department argued that this agreement stifles competition. By paying Apple to be the default search engine, Google effectively boxes out competitors. This, the Justice Department argued, harms consumers by limiting their choices. Apple's services business has been a shining star in recent years. This segment, which includes the App Store, Apple Music, and iCloud, has grown rapidly, becoming a vital part of Apple's revenue. The revenue from the Google agreement is a significant contributor to this success. Losing the Google revenue would be a significant setback for Apple's services business. While the exact impact is difficult to quantify, analysts estimate that it could cost Apple billions of dollars annually. This loss would come at a time when Apple is already facing slowing growth in iPhone sales. The potential loss of this revenue stream highlights the importance of diversification for Apple. While the services segment has been a success story, relying too heavily on any single source of revenue can be risky. Apple will need to find new ways to grow its services business to offset the potential loss of the Google deal. The impact of the antitrust ruling extends beyond Apple's services business. While the Google agreement represents a small percentage of Apple's total revenue, its loss could still have a ripple effect across the company. The potential loss of this revenue stream could impact Apple's profitability. This could lead to pressure from investors to cut costs or find new revenue sources. It could also affect Apple's ability to invest in research and development, potentially impacting its ability to innovate. Despite these challenges, Apple remains a financial powerhouse. The company has a strong balance sheet, a loyal customer base, and a history of innovation. However, the antitrust ruling serves as a reminder that even the most successful companies are not immune to external pressures. Apple will need to adapt to this changing landscape to maintain its position as a leader in the tech industry. The antitrust ruling represents a significant financial risk for Google. The company could lose billions of dollars in revenue if forced to renegotiate its agreement with Apple. This could have a ripple effect on Google's profitability, potentially impacting its stock price and future investments. The court's decision could also force Google to change its business practices. The Justice Department argued that Google's payments to Apple were anti-competitive. If the ruling stands, Google may need to find new ways to distribute its search engine and other products. This ruling is a stark reminder that Google's dominance is not absolute. The company faces increasing scrutiny from regulators around the world. This decision could embolden other countries to take similar action, further threatening Google's global reach. Google has vowed to appeal the court's decision. This sets the stage for a lengthy legal battle that could take years to resolve. The outcome of this appeal will have significant implications for both Google and Apple, as well as the broader tech industry. The appeal process will likely involve complex legal arguments and expert testimony. The outcome is far from certain. The appeals court could uphold the lower court's decision, overturn it, or send it back for further review. This uncertainty creates a cloud of doubt over the future of the tech industry. Companies are left to navigate a complex legal landscape, unsure of what the future holds. This uncertainty could stifle innovation and investment as companies wait for a resolution. The antitrust ruling against Google marks a potential turning point for the tech industry. It signals a shift in the regulatory landscape, with governments around the world taking a closer look at the power of big tech. This case could have far-reaching consequences for how tech companies operate in the years to come. This ruling could embolden regulators to take a more aggressive stance against other tech giants. Companies like Amazon, Facebook, and Apple are all facing scrutiny over their market power. This decision could lead to a wave of new antitrust investigations and lawsuits. The tech industry has long enjoyed a period of relatively light regulation. This era may be coming to an end. The antitrust ruling against Google suggests that governments are no longer willing to allow big tech to operate with impunity. The antitrust ruling could have a profound impact on the future of search. Google has long dominated this market, but the court's decision could open the door for competitors to gain ground. This could lead to a more diverse and competitive search landscape, potentially benefiting consumers. If Google is forced to change its business practices, it could create an opportunity for other search engines to emerge. Companies like Microsoft, DuckDuckGo, and Brave are all vying for a larger share of the search market. A more competitive search landscape could lead to innovation. With more companies vying for users, there would be greater incentive to develop new features and improve search quality. This could benefit consumers by providing them with more choices and a better search experience. The antitrust ruling against Google signals a potential new era of antitrust enforcement. Regulators are increasingly concerned about the power of big tech and its impact on competition. This case could set a precedent for future actions against tech companies. The traditional tools of antitrust enforcement may need to be adapted for the digital age. The tech industry is characterized by rapid innovation, network effects, and zero pricing models. These factors can make it difficult to apply existing antitrust laws. Regulators will need to develop new frameworks and methodologies to effectively address antitrust concerns in the tech sector. This will require a deep understanding of the industry and its unique characteristics. The antitrust ruling against Google is just the beginning of this ongoing process. The antitrust ruling against Google is part of a broader battle to ensure a level playing field in the tech industry. Startups and smaller companies have long complained that big tech uses its size and power to stifle competition. This ruling could level the playing field, fostering innovation and creating a more dynamic marketplace. A more competitive tech industry would benefit not only consumers, but also the economy as a whole. It would foster innovation, create jobs, and drive economic growth. The antitrust ruling against Google is a step towards achieving this goal. The battle for a level playing field in the tech industry is far from over. However, the antitrust ruling against Google is a significant victory for those who believe in the importance of competition. It sends a clear message that even the most powerful tech companies are not above the law.